I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Huawei says U.S. sanctions could slash sales by $30 billion over the next 2 years as the company braces for a massive drop in international smartphone shipments. Plus, Intel reviewing its global supply chain in the midst of the U.S.-China trade war. CEO Bob Swan tells Bloomberg the company doesn't believe tariffs are an effective way to drive global trade. And YouTube Kids is 4 years old, but there's one problem. The vast majority of children aren't watching it. First, to our top story, the global smartphone market is taking a huge hit in the ongoing trade war between the U.S. and China. Monday, multiple analysts wrote that Apple's iPhone could be seeing weaker than expected demand, especially in China. And Huawei gave a doomsday outlook for smartphone sales as it remains on President Trump's blacklist. Bloomberg has learned the Chinese company is ready for a drop of up to 60% in international smartphone shipments. Huawei founder Ren Zhengfei expects U.S. sanctions will slash its revenue by about $30 billion over the next 2 years. To discuss, I want to bring in Bloomberg Tech's Mark Gurman, and here with me in San Francisco, Bloomberg Tech executive editor Tom Giles. And international shipments, that is, shipments that go outside of China, Tom, account for about half of Huawei smartphone sales. So that is a huge chunk, and this is the first time that Ren Zhengfei has really put a number on it. What did he say?
Yeah, well, he talked about the revenue hit being in that tune about $30 billion. They don't want to resort to mass layoffs. They don't want to cut research and development spending, and they don't want to sell off parts of the business. So those are a few things that he said they don't want to do. Clearly a revenue hit. People close to the situation have told us that they're looking for that big drop-off in smartphone sales. This is something that we've been talking about, talking to customers, partners across Europe who've said, yeah, there's a huge drop-off because people don't know, what's going to happen to this company and what does it mean to me if I can't access Android services and products on my smartphone. So it makes a difference to consumers, and it's a big deal in Europe, which was a real growth driver for them outside of Asia, because they're clearly not anywhere in the U.S.
Right. Mark, China, Huawei sales account for about a third of the China smartphone market. Could they make up the shortfall in China?
You know, it's possible, because if we are to believe that some people in China are going to stop buying iPhones and products from American companies and companies that are based outside of China, those sales are going to have to go somewhere. So it's possible Huawei can pick up a little bit in China, but I personally don't think the difference is going to be too drastic because of any changes happening in terms of Chinese iPhone sales.
Meantime, you've got a number of analysts coming out with grimmer outlooks on iPhone sales, not just because of China, but seemingly globally. What are they saying?
Yeah, so there's a lot of speculation now, not only because of the trade war with China and the tariffs, about iPhone sales, people not being that optimistic, or analysts, investors not being as optimistic. What we've seen from Apple in the early days of the iPhone is they used to come out with a big iPhone redesign every 2 years. But what we've seen in the last few years or so, the last few iPhone cycles, is that the changes year over year have just not been that dramatic. So what we're going to see for the new iPhones coming out this September is an iPhone design that's the same essentially as the one this year and the same as the one from the year before that. So we're talking about a 2017 design in 2019 with major changes not coming until 2020 or 2021. That lengthens the cycle. It's going to not push people to buy the new models because the hardware updates are not just that significant, and the software updates are being made available to more and more older devices. So I think the combination of the two isn't lethal for Apple, but it does pose a long-term challenge for them.
And obviously, Tom, there is the greater macroeconomic uncertainty that's not just impacting Apple and Huawei, but the entire smartphone market in general.
Right. The trade war is really taking a toll, and you're seeing it in a lot of different ways. There's concerns about chip makers and demand for their products. There's concerns about the 5G rollout more generally, right? We're on the cusp of this massive technological upgrade where we're going to have ubiquitous wireless service. We're going to have the Internet of Things. All of our devices are going to be able to talk to each other. Well, Huawei is a big provider of that equipment. And so to the extent that you're going to see people cutting back on purchases of Huawei gear, the concern is that slows the rollout of 5G, and that slows the rollout of all the services and hardware and other all the things that were going to be accompanying that rollout of 5G. So a lot of people are affected in a lot of unpredicted ways.
Now, interestingly, Mark, as you've reported, Apple wasn't planning to unveil a 5G iPhone this year. Huawei, though, of course, is the leader in 5G. Couldn't that have given Huawei an edge in this year's particular market?
Yeah, and that's a good point, your question, as well as to add to Tom's point, right? Apple is one of the biggest phone makers in the entire world, whether that's in the US, China, or Europe. So Apple not coming out with a 5G device is going to mean that some carriers and partners, component makers, software makers aren't going to rush to get out new things to be compatible with 5G until Apple's there, because where Apple tends to go is where the industry follows. So I think this whole 5G push is really going to be an even bigger deal in 2020, 2021, because Apple is about 1 or 2 years behind in this market.
Meantime, Mark, Huawei was planning to unveil a foldable phone this month, I believe. They've delayed that in part because it seems Samsung has delayed their foldable rollout, in part because of issues with the screen, which you yourself experienced. What's the latest on that?
Right, so yes, like to your point, Huawei was planning to launch a foldable phone fairly soon, but they saw how Samsung essentially embarrassed itself by announcing a phone that costs $2,000 that by removing the screen protector on front can damage the phone completely. They seemed like they weren't willing to take much responsibility for that, partially blaming it on the press who reviewed the devices early, but Huawei is taking a different approach. They're rather waiting the extra 3 months. They're going to see if they can mitigate any problems. They're probably using this next 3 months to put it through further testing, and then they're not going to launch the device until it's ready. As you know, Huawei's had enough issues. It doesn't need another one, and this is how to prevent that, or at least mitigate that from happening.
All right, lots to continue to follow. Bloomberg Tech's Mark Gurman and Tom Giles, thank you both, as always, for weighing in. Meantime, Google has appointed a new China region chief as trade tensions between the U.S. and China escalate. Stanley Chen, previously general manager of Google in Taiwan for 8 years, will take over running operations in China, based in Shanghai. Google takes in about 15% of its revenue from the Asia-Pacific region, even though it pulled its search engine from mainland China back in 2010. Coming up, more companies looking for a backup plan in the escalating trade war. Intel CEO Bob Swan says the chip maker is now reviewing its global supply chain. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Intel is reviewing its supply chain amid growing uncertainty over the U.S.-China trade war. In an interview with Bloomberg Sunday, CEO Bob Swan said the company is encouraging both governments to engage in constructive dialogue as it looks to mitigate the impact of tariffs on its own company. Take a listen.
We have a lot of customers there. We have a factory there. We have assembly and test, and we have lots of brilliant engineers in China, so it's a big market for us. What we've been focused on is really trying to encourage the governments on both sides to engage in constructive dialogues, and we do not believe that tariffs is an effective way to drive global trade. So that's where we think we can have some influence. We obviously don't have control. So what we try to do with our customers and our partners is work to mitigate any consequences of tariffs that go into place that could impact the free flow of goods around the world. And we've been focused on that quite a bit because our customers need product, and some of our global customers have big assembly operations in China. We need to work constructively with them to try to mitigate these implications.
So I would understand from that although your peers like Google, which is starting to shift production out of China, and Apple, has some kind of plan B in place, that Intel isn't considering, or at least in the back of your mind you have some kind of backup plan should something happen to shift some of the production out of China?
in light of tariffs, we need to think through with our customers and with our own operations, how do we mitigate the flow of goods to reduce any impact that tariffs could have on our respective businesses? Because our belief is higher tariffs ultimately end up in higher prices for consumers around the world, and we do not think that is an effective vehicle.
So you're
we
not
work
there
to
yet.
mitigate those.
So you're not there thinking about shifting anything out, or you're not even worried about a backup plan. You're really working on mitigating between the governments, mediating.
No, I think there's multiple things going on. First, we are working with the governments to encourage them to get to a better resolution for the good of global economic trade. That's first. Secondly, we have been working since the tariffs started last year, both with our manufacturing operations as well as the assembly operations of our customers. We have been working to mitigate the impact of tariffs by looking at more effective ways for the movement of goods around the world so that our products won't be more expensive at point of sales.
Do you have anything actionable that you can tell me? What does it mean, mitigate? What do you do?
So I think the tariffs, the first three waves of tariffs, have effectively been on product that's assembled in China and shipped to the U.S. So mitigate means how do we move goods? Sometimes our customers will move their operations, and how do we work the global supply chain so less product is coming directly from China to the U.S. that will be subject to tariffs. So mitigate means how do we collectively work together as the global supply chain, us, our customers, and our partners, to reduce the impact of higher cost arriving at consumer shelves.
Okay, so that does involve perhaps some moving around.
Absolutely.
So moving on to autonomous cars. Today you took your third ride, I think you told me, in the autonomous car, and I think you tried out a new system, the AV system, that'll be part of a ride-hailing service. What's your feeling about it after you come out of this ride?
I went on the streets of Jerusalem. So traffic going both ways, on and off ramps, the roundabouts that the cars had to go through with people walking across the street and doors opening, and to watch how far Mobileye technology has come to adjust and adapt in a very safe kind of environment. The gentleman behind the wheel that took me on the drive, not once did he have to put his hands on the wheel. So it's very incredible. And the most impressive thing is to see how far they've come in each one of the successive drives that I've gone on over the last 2 years.
Intel and Mobileye announced, I think at the end of last year, that they plan to build out a self-driving ride-hailing service. What's going on with that? What can we expect from that? And when can I hail down a RoboCab?
Yeah. So the idea, last year we announced in conjunction with two partners, Volkswagen and Champion Motors, that Volkswagen would build the car, Mobileye would build the technology inside the car, and Champion Motors would help assist in the operations of the car to bring mobility as a service here in Israel in the 2021 timeframe. So that's what we've embarked upon, and we're extremely excited about what that means for bringing safe security to address, two fundamental problems in the highways in Jerusalem, traffic and safety. And we think with our technologies, we're going to be able to deploy mobility as a service over time here and then expand it across the rest of the world.
Intel CEO Bob Swan there, speaking to Bloomberg in Tel Aviv. For more, I want to bring in Bloomberg's Ian King. We'll get to the robocars in a moment, Ian. But first, what he said about China. How big a hit will this trade war be for Intel in particular?
Yeah, I mean, Intel is one of the companies that are absolutely in the crosshairs here. In many respects, China itself is the largest market for computers. It's the largest market for semiconductors in general. Intel has to be playing in that market. What he was talking about by way of mitigation is basically stopping that China to US import, or minimizing as much of that as he possibly can as a way of helping it. But most of its plants are in this country. It has test and assembly in China. It has a lot of devices that its products go into in China. So it's a really difficult thing. So that's why he kept saying, we're looking into it, because nobody knows the answer right now.
Is there any sense of where the chips will fall? Are they able to redirect?
Well, they can't move plants from this country to anywhere else, and a lot of what goes on in China cannot be easily relocated, and anyway, why should it be if your end market is in China as well?
Now, the robocars, how significant could this be for Intel's business?
Yeah, I mean, Mobileye has been a real bright spot for them. If you looked at the most recent earnings, more than 30% year-on-year growth, which is really good for them. You know, it's something they spent a lot of money on, and people are like, oh, should you be really doing this? But a lot of cars on the road with mobile, with Mobileye technology. At this point, though, it's still a relatively small business, still only a few $100 million a quarter. That's not going to move the needle overall for Intel.
Right, and if these cars take 10 years to get to market, then what?
Yeah, I mean, that's the overall concern that not just Intel has, which is this market going to develop as fast as they want it to? Are we going to see the multiple, tens of millions of vehicles on the road anytime soon?
And how do their efforts in self-driving cars compare to other chip makers?
They're on the road. Right? They're on the road. A lot of companies right now, the NVIDIAs and people like that, are talking about test programs, talking about this, that, and the other. Intel got in early. They got in at the sort of driver assistance, the so-called ADAS level. So they're generating data, they're generating experience in a real-world scenario. So in that sense, they're ahead.
All right. Bloomberg's Ian King, who covers chips for us. Thank you so much for that extra context. Coming up, Amazon is sharpening its approach into the $130 billion video game industry. We will talk about the latest moves by the e-commerce giant next. And Bloomberg Tech is live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Apple CEO Tim Cook gave the commencement speech at Stanford University over the weekend. While he discussed the virtues of higher education and Stanford's relationship with the tech community, he also doubled down on his critique of some of the biggest issues facing big tech right now.
With every data breach, every privacy violation, every blind eye turned to hate speech, fake news poisoning our national conversation, the false miracles in exchange for a single drop of your blood. Too many seem to think that good intentions excuse away harmful outcomes. But whether you like it or not, what you build and what you create define who you are.
Meantime, at a time when most tech giants are jumping into the video game industry, Amazon is fine-tuning its approach. According to the Wall Street Journal, Amazon laid off several dozen employees from its division that develops video games last week. The layoffs come as Amazon is struggling to create a blockbuster game of its own. Joining us to discuss, Matt Kanterman of Bloomberg Intelligence. And Matt, many people may not have quite realized that Amazon is working on its own blockbuster video games. What exactly happened here?
Yeah, it sounds like Amazon's, as you said, just trying to fine-tune its approach. They've been developing a couple games internally for several years. Some of those are just sneaking out into betas and such, but none of them have been full-time releases yet. I think what Amazon's really after is, similar to what Google announced with their Stadia. They see value longer term in cloud-based game streaming, but they also understand that to be successful, they need exclusive content, and so they're trying to build out their own content so that way when cloud streaming is real, they'll be able to compete in that market.
So how significant are these layoffs?
Probably pretty insignificant. I mean, if you think about the video game industry, for every game that gets released and every blockbuster, there's probably a graveyard full of dozens that never see the light of day, whether they were just prototypes or they actually had work done. This is just the nature of the creative industry of video games. You have a lot of projects, and you prudently have to cull them early in development if they're not going to be promising commercially.
Now, we know that Amazon bought Twitch a few years ago. How is that going, and how does that fit into the bigger picture of what Amazon is trying to do?
Twitch is still an interesting asset for Amazon. They really haven't architected what they're going to do with it. It's still the biggest live streaming platform in the world for gaming. I think what they're going to aim to do eventually is really leverage their direct-to-consumer reach, and as the cloud becomes real for gaming, basically make it a way that you can buy games while watching someone play and then jump right in with them into the, via the cloud. It's a really promising selling point. Google's trying to do exactly that with Stadia and YouTube gaming. So I think Amazon's in a better position just because they already have the eyeballs on Twitch. And, as streaming does become real roughly in the next 5 to 10 years, when it really reaches scale, Amazon, Google are really going to seek to take a slice away from Microsoft, Sony, Nintendo, who control the console industry.
That said, even if Amazon has its foot in the door with Twitch, if they haven't exploited it, how much of a better position is Amazon really relative to Google working on a streaming service, Apple working on a streaming service, Microsoft and Sony working on a streaming service? I mean, the competition landscape is just going to change dramatically in the next couple of years, isn't it?
I mean, at the end of the day, it's all about content. Content is king, and particularly in gaming. Unlike the video industry, where everyone gave their content to Netflix, I think the game makers realize they're not going to make that mistake, like the video creators did. And along with that, the scale economies of making games are so much larger. AAA games have $100 million budgets nowadays. It's not just a TV series, which $10, $20 million at a clip. So the scale to create great games and the ability to have all the content, the development teams, and the intellectual property, Microsoft and Sony working together are probably going to win the cloud. But maybe the other people can sneak out a small portion as well.
And do we have any idea what kind of games Amazon is working on? I mean, are these like first-person shooters or more like a Farmville or an Angry Birds?
They're definitely more of the first-person shooters. They're not the casual games. One is like a Civil War era shooter game, so it's pretty interesting. We'll see what they come out with eventually. But I think that what we've seen in the industry is that games that are big open worlds that have lots of experiences and ability to just live inside that environment are the games that have the staying power long term, and that's probably where they're going because they want to engage with the social element they have with Twitch for sure.
All right, Matt Canterman for us and Bloomberg Intelligence. Thanks, Matt, for weighing in. Coming up, MoneyGram and Ripple have cut a deal. Will it bring the cryptocurrency one step closer to the mainstream? That's next. And later, YouTube's kid video site has a problem. Kids are leaving. We'll discuss why the safer version of YouTube has struggled to hang on to younger viewers. This is Bloomberg. Technology. I'm Emily Chang in San Francisco. Is Bitcoin getting a Facebook bump? Well, the cryptocurrency crossed the $9,000 mark Monday. The jump coming as the crypto world awaits the possible launch of Facebook's own digital currency this week. Meantime, crypto payment facilitator and exchange Ripple has just announced a partnership with the global payments provider MoneyGram. The deal will let Ripple serve as a cross-border payment and foreign exchange settlement option for MoneyGram. To tell us more, Ripple CEO Brad Garlinghouse is with us, joins us from Ripple HQ in San Francisco. Brad, good to have you back with us. So MoneyGram owns about 5% of the global remittance market. How will this deal work?
Emily, it's great to be back. Thank you. The deal is a big step, I think, for Ripple, but it's even a bigger step for the overall industry. As you know well, there's been a lot of excitement around what blockchain and what digital assets and crypto can mean for the industry, and I think it's the reason why players like Facebook are diving in also. But we haven't yet seen much beyond experimentation, and really at Ripple, I think we are the market leader because we have matured aggressively and we're really solving real problems for real customers. MoneyGram is just the manifestation of that, and as the second largest global remittance company, we're able to have a big impact with one customer and one partner in this.
Now, as I understand it, Western Union tested Ripple to use for its network, but it ended up being more expensive than its current network. Is MoneyGram actually saving money by using Ripple?
Actually, what Western Union said was that they've been around for decades, and what they said is that in our beta time, the time the product hadn't yet launched, they said that we matched the efficiency of what they were already optimized. So my view on that was they had spent decades getting to an efficiency that we matched with a beta product. So I was actually really pleased that Western Union could come out and say we're already as good as the decades they had invested in building out that capability. With MoneyGram, we know out of the gates we can actually make their system much more efficient. And the key reason is today, both Western Union and MoneyGram, they pre-fund accounts around the world so they can make payments. So MoneyGram and Western Union have negative working capital. What our products allow those companies to do is to not pre-fund and to shoot payments in real time. And that's a massive savings in terms of the efficiency, not just in terms of what is the cost in FX, but the capital cost, the outlays. It's really a dormant asset when you pre-fund those, is sitting there waiting for people to make payments. And that's really the transformational thing that XRP as an extremely efficient digital asset allows for the industry.
How much equity did Ripple get in this deal?
Well, what we committed to do is to invest up to $50 million. We'll end up owning somewhere between about 6 or 7% and 10% of the company. They're going to they decide over the course of the next year how much of that $50 million they want to call down. At close, they've called down $30 million at a price of $4.10 per share. So we're excited to be shareholders because we think that actually it's been an undervalued asset. As you may know, Ant Financial tried to buy MoneyGram over a year ago. That was ultimately blocked by CFIUS, but we think it's a really undervalued and strategic asset in the overall payments landscape. We couldn't be more excited to have a shared vision of how digital assets can change the nature of how liquidity is managed for payment providers globally.
Right, a potential $1.2 billion deal that was blocked by the U.S. government. So what's next? Do you have plans to try to gain share in other existing money transfer services?
Well, what's next for us is to continue to build out and expand the number of corridors where we're live today. We work with over 200 banks and financial institutions around the world today. And with this new product around liquidity, we're now enabling liquidity into the Mexican peso and the Philippine peso. We certainly expect to be much broader than that, but we've only been live with this product for about 6 or 7 months. So I feel like we made a tremendous progress in a short amount of time. We're going to continue to invest with the customers we have today, as well as expand the number of corridors we support globally.
All right, so Facebook, we believe, announcing crypto plans tomorrow. There's broad speculation that this will be some sort of cryptocurrency that can be used internally within Facebook's walls to make payments on Facebook and within Facebook's other services like Instagram. What's your take?
Well, look, I think it's an incredibly positive signal for the overall blockchain and crypto market to have a player like Facebook leaning in. You know, I think there's been obviously a lot of skepticism in the origins of crypto coming from kind of an anti-government and anti-bank point of view. To see major industry players lean in and participate in the market, I think is a really positive for the overall market. It'll be really interesting to see what part of the market they focus on. David Marcus has been an incredible leader, and given his experience at PayPal, I expect we'll see them do something very consumer-oriented part of the payment system. But I think it's, you know, I'll be watching as alongside everyone else to see what they decide to pursue. And I think what I've heard is the technology isn't quite ready to go live, but sometime in 2020 they'll be out there actually deploying that. For me, what MoneyGram and the stuff we're doing today is the key difference. It's what can we do today with these technologies to solve real problems? And I think it's been really hard for the people following this industry to separate what is noise and what is actual real and pragmatic today.
Now, that said, do you have any concern that what Facebook will unveil will make Ripple less relevant?
I don't think so. I mean, you know, Facebook is obviously a consumer-oriented company. Instagram, WhatsApp, it's a very consumer-oriented company. What Ripple is doing is really enterprise infrastructure and interconnecting various payment networks around the world. So we're working with some of the biggest banks around the world, small payment providers, and really providing that interoperability between the different networks as opposed to solving within a network kind of problem. So I think it's, you know, it's just very, very different than what I expect they're going to be doing.
All right, well, we're going to be covering this week, and I know you're going to be watching. Ripple CEO Brad Garlinghouse.
Absolutely.
Thank you so much, Brad, for stopping by. All right, Boeing CEO Dennis Muilenburg says he expects the 737 MAX jets to return to the skies by the end of the year, possibly with a new name. He spoke with Bloomberg's Guy Johnson at the Paris Air Show. They talked about plans to fix the jets, working with regulators to get them recertified for air, and when they will actually fly again.
First thing is we are very, very focused on safety. That's our paramount focus here, and that's the tone for the entire show. We are making good, solid progress on bringing the MAX back up, working through the certification simulation flights this week. We hope to schedule the flight test, the certification flight shortly, and then get the airplane back up in the air. But all of this is being done through the lens of safety, and we will take whatever time is necessary to make sure the airplane's safe.
2019, 2020?
Well, it's something we expect to happen before the end of this year, certainly. So we're making good, steady progress. But I don't want to give you a specific timetable. Again, we will take the time necessary to make sure the airplane is safe. Now, we expect it to happen this year.
Are the regulators going a little deeper into the systems than you anticipated? Is this a more thorough examination of the aircraft?
Well, it's a very thorough examination, and we expect that, and in fact, we encourage it. So we're working with the regulators around the world, the FAA, EASA, Chinese authorities, Brazil, Canada. About 2 weeks ago, the FAA hosted a multi-regulator forum in Dallas. So we're working with the bodies around the world, and it's really important that we do this in a very thorough and disciplined way.
But you keep emphasizing the thorough. Is it going? Are the regulators going further in than you would have expected initially?
I think we're going even deeper than normal, and I think that's good. We encourage that. We're looking at every dimension of the MAX, the software update that we're making, but not only the airplane itself, also the training and education materials and the overall end-to-end design and certification processes. So this is a very holistic effort.
Are the regulators all on the same page?
Yeah, they're very well aligned, and I see growing convergence between the regulators. A lot of questions that we're answering, a lot of detailed work on the certification, and we're encouraged by the collaboration between the regulators, and we're seeing growing convergence between them.
Do you think the aircraft will fly first in the US and then in Europe, or do you think that'll happen at the same time?
Well, I think there's an opportunity to do it together. I know the FAA and EASA are having meaningful discussions as we work through certification. We're going to support whatever the regulators want to do in terms of bringing the airplane back up.
But your sense is they're getting closer together, not further apart. Is there a gap between where the FAA is and EASA is?
Yeah, I think there's still some work to do, but clearly the trend is that they're converging, and I think that alignment just adds strength to the effort.
And where are the Chinese regulators in all of this?
They're part of the discussions as well. Again, if I look across the regulators around the world, I see convergence across that entire group. So I'm encouraged by that progress, and our focus just going to remain steadily on safety.
Bloomberg's Guy Johnson there with the CEO of Boeing, Dennis Muilenburg. Coming up, YouTube has spent the last year throwing resources at improving child safety. But is YouTube Kids any more kid-friendly? We'll discuss next. This is Bloomberg. Elon Musk took to Twitter over the weekend to say he was deleting Twitter. The Tesla CEO tweeted, "Just deleted my Twitter account," less than 2 months after ending his legal battle with federal regulators over his often unpredictable use of social media. He also changed his Twitter handle to daddy.com on Father's Day, a website with resources for single dads. Hours later, though, Musk's account appears to still be active, we just checked it, and has returned to its original handle at Elon Musk. YouTube Kids was first introduced in 2015 as a semi-controlled space specifically for children under 13. But while YouTube touts the app as a safe alternative for younger audiences, not many kids actually using it are sticking around. According to several YouTube staffers, most children using the Kids app shift to the main site long before they hit 13, where they risk being exposed to inappropriate content. Joining us to discuss Loop Ventures managing partner Doug Clinton and Bloomberg's Lucas Shaw with us in LA. So Lucas, just how many kids are actually using YouTube Kids?
YouTube says more than 20 million, so that's not an exact number, but you have to figure if it was more than 30 or more than 25, they'd say that. So between 20 million and 25 million. To put that into context, there are 2 billion people who use YouTube every month. And then if you just look at some of the most popular channels that program for kids, there are those with larger audiences or larger subscriber bases than the entire audience for YouTube Kids.
So what are the trends in viewership? Are the kids using it, sticking around? Are they going to watch Netflix? What are they doing?
It's really popular, or more popular among kind of the 2 to 7 demographic, because that's when parents can still exercise a great deal of control over what their kids are watching. And so you don't have that 8 or 9-year-old who wants to be like her older sister, her older brother, and wants to, I don't know, the person who would watch The Real World when they were 10 years old and probably shouldn't have. So I think most kids who do watch it when they're really little, watch it when parents are kind of exercising control. And once they get to a certain age, they graduate to regular YouTube, or to your point, they'll watch Netflix, watch something else. There's no shortage of places for kids to find programming right now. YouTube is just the #1 destination.
So, Doug, how big a problem is this for YouTube, given that I guess YouTube Kids is quite a small piece of the pie?
Yeah, it is a problem. About 5% of YouTube's total revenue, we estimate, comes from kids-related content. So it's certainly a meaningful part of their business in the hundreds of millions of dollars. I think one of the challenges that YouTube Kids in particular has is, as you sign up to use that particular product, you actually can only bucket your content into 2 buckets. Either you say your kid is under 8 or your kid is under 12. And I think when you talk about having kids use the product after age 7, the types of content that kids want to watch when they get older and older, I think, evolves much more quickly than the buckets that YouTube offers for kids on their platform today.
So, Lucas, what is YouTube actually trying to do about this?
YouTube's approach to kids in many ways resembles its approach to all of its brand safety problems, which is that it rolls out a series of small changes, mostly in response to problems that have already happened, that it hopes will sort of minimize the possibility of a problem or a disaster, but will not eliminate the possibility. So they will remove channels that they see as being malicious in some way, or they'll take down videos that are inappropriate, or they'll create greater tools for parents to monitor and restrict what their kids can watch. But the big change that YouTube won't make, that a lot of parents and activists and even some business partners would like to see them make, would be to say, take the Kids app and just only hand-pick the videos that are in it. Don't allow anything to come into that filter that might be inappropriate. Or just to kind of create more warnings and more tools for parents to make sure that they feel safe when their kids are on it.
Well, and I would add, as a parent, many of the videos you see on YouTube Kids just aren't entertaining. It might be a figurine jumping around against an animated backdrop, but it's, really not much. Doug, whose responsibility is this really? I mean, is it parents' responsibility to monitor what their children are watching, or is it YouTube's responsibility to curate this content better?
We think it's both. I think responsibility in this case is really this sort of holistic picture. I think that YouTube certainly should do a better job. I think the algorithm, in terms of what they play next, is, in our opinion, one of the biggest problems. You can, once you get 3 to 4 or 5 videos in, you can run into some very questionable content that your kids are seeing. But I do also think that parents are given tools. YouTube Kids, it isn't the most entertaining application, but freedom and safety, I think, are always a trade-off. And so if you want the ultimate safety for your children, I think you should force them to watch YouTube videos only through YouTube Kids, even if they're not the most entertaining videos.
Meantime, Doug, as Lucas and our colleague Mark Bergen have reported, some Google staffers, YouTube staffers, won't even let their kids watch it. Isn't that a problem?
We've seen this with Facebook too. There's a lot of reports of Facebookers not allowing their kids to sign up for Facebook until they're much older. So I think it is indicative that some people, even within the organization, see a problem. But it's just difficult to solve. I think culturally, when you think about YouTube and Facebook and really social media in general, all these platforms were started as ways to allow people to express themselves freely. And YouTube, one thing it's done a very good job of is it's created this open platform for millions of creators to kind of express themselves. So it is a difficult trade-off, I think, to eliminate some of the freedom that these platforms were founded on.
All right, Doug Clinton of Loop Ventures and our own Lucas Shaw, thank you both. Something I know that Bloomberg is going to continue to follow. Still ahead, Slack is going public, but will it be more Beyond Meat or Uber? We'll discuss next. This is Bloomberg. Workplace software maker Slack is looking to be the latest tech company to join the public ranks. We took a look at why it is taking a different route than the companies that have come before it so far this year.
Don't call it an IPO. In a year where we've seen major tech companies hit the public markets, workplace collaboration software company Slack is taking a different route, opting for a direct listing, allowing its investors like Andreessen Horowitz and Excel Partners and even employees to sell their existing shares immediately, much the same way Spotify did last year. Slack's going public at a time when U.S. stocks got an upbeat start to the year, but have faced extreme volatility in the midst of a trade war with China and antitrust scrutiny looming over big tech. Tens of billions of dollars have already been raised in public offerings, though while some IPOs have soared, others have floundered. CEO Stuart Butterfield and his team have already helped transform the way companies manage endless emails and messages. But the trick will be to convince potential investors that the company is worth its targeted valuation of around $16 to $17 billion. Because despite Slack's revenue growing to $600 million this fiscal year, its revenue growth is actually slowing, and its losses are expected to near $190 million, another unprofitable tech unicorn. So what could make this a success for Slack?
No news is good news. If it's quiet, if it stays pretty stable, if there's some trading and nothing crazy happens, it'll probably be seen as a pretty big win.
And we'll find out this week if investors are as collaborative as Slack hopes.
To further discuss, we've got Bloomberg Tech's Ellen Hewitt, who you just saw there and covers Slack for us, and in Boston, Forrester principal analyst Michael Facemeyer. So, Michael, you've said Slack needs to do more than just be a chat app. They're a dime a dozen. What do they need to do?
Yeah, they've got to prove to the market that they are a collaboration platform, because that's the holy grail of enterprise software, is to build something that people want to build on top of. And so if they can prove that you should and prove that it's easy and people build things on top of them, then it's hard to get that out of your company. And so that leads to ongoing revenue that starts to drive further growth.
Ellen, what is investor interest like right now? I mean, we're 3-4 days out. What are we seeing?
Well, it's a little different than a regular IPO, and you don't have the same structure of banks going around and raising interest from major investors ahead of time. But we have been tracking Slack share sales in the private market. As early as February, there was a lot of interest. We saw prices that were at more than double the last private funding round. And it seems like, based on disclosures since then in filings, that interest has stayed there. And that's partly how we were corroborating this idea of where the company hopes to be valued at when it goes public on Thursday.
So, Michael, how close is Slack to being more than an app, or to being, stiff competition for whatever alternatives are out there, in your opinion?
Yeah, that's the interesting thing, is what is that competition? As you said, there are many, many chat apps out there, and most of them are free. So they have to prove that they can be more than that. Many developers and companies know that. Ask any developer in your company, and they've probably heard of Slack. But ask the person that tracks ERP approvals, and they probably haven't. And so they really need to get out of that technology space they're in and grow to the rest of the company and prove their value to everyone else in the company, the same value that most technologists and especially developers have seen already.
Right, Ellen, and you see this within companies, groups of or particular teams going rogue, using Slack. They love it, but everybody else at the company has no idea that anybody is using it.
Well, one of the things that Stuart Butterfield, the CEO, said in a recent earnings call was that one of the biggest and most central challenges and opportunities that Slack has is explaining to people who have never used Slack what it is. And there's not an easy answer. He tried to say, it gets close to replacing internal email, which is a pretty good way of saying it, but it's more than that. And I think it's just one of these things that until you try it, you don't really know it. And that's great, because once you try it, people love it. But until you do, it's kind of hard to grasp, and that could be a challenge for their growth going forward.
So, Michael, as someone who is outside of mine and Ellen's Silicon Valley bubble, what is the view on Slack beyond? I mean, is it sort of a cool thing that people who don't use it don't quite understand, or maybe don't even know about? Or, is it becoming more mainstream?
Yeah, so it's starting to become more mainstream simply because the people that are using it realize that you can do more than just chat. When I'm in a company and I want to do things that are fairly monotonous, we all know computers are supposed to do that for us, but until now, you've had to be able to program the computer to do it. With a platform like Slack, all of a sudden I can start to take monotonous things, put a natural language interface on top of it, and I can almost start to talk to the applications that I once had to deal with in ways that I didn't really enjoy. So that's what's going to start to bring it to the mainstream and to the masses more than it already is.
So, Ellen, quickly, what's going to happen on Thursday at the New York Stock Exchange? Are we going to see the typical gathering of, CEO, early employees standing there ringing a bell, or no?
I think that's the expectation, but if it's anything like Spotify's direct listing was a year ago, instead of trading starting immediately, there might be a period of a couple hours in which we're waiting to see when the first trade takes place. That's in part because with the direct listing, you're not starting off with an original price, and instead the exchange and the direct market maker are doing this complicated calculation to figure out where should the first trade begin.
All right, Bloomberg's Ellen Hewitt and Forrester's Michael Facemeyer. We're going to be covering it. Ellen's going to be covering it. What is happening on Thursday on the floor of the New York Stock Exchange? And I should note that Bloomberg Beta, the venture capital arm of Bloomberg LP, is an investor in Slack. And that does it for this edition of Bloomberg Technology. Remember, we're live streaming on Twitter. You can check us out there at Technology. Follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg.